All right, guys, welcome back. So if you're looking for swing trade ideas, contrarian plays, looking to take advantage of potentially the next large move and not just jump on momentum, then that's this channel. That's what we cover here. So I cover everything really from a technical analysis standpoint. I do mix in some fundamentals. Let's get right into the charts and see what we got. So triple Qs, the market's been all about tech. Ultimately, I mean, on Friday, I noticed Apple was up, and it was really just Apple. So there's a real narrowing of breadth, which means less and less stocks are continuing to rally. And actually, if you look internally at the ETFs and the sectors that don't have the 5 mega cap FANG stocks, they're continuing to show some weakness. So we're going to continue to watch that. What that means to me is this triple Qs, which is a tech sector, you can also look at XLK, but both of those, when they break, the market's probably going to break down. And that's because this is the only thing, the only strength in the market for the most part is in tech. Now, yes, there are some other stocks that are strong, but they don't move the needle when it comes to the S&P 500. So here's your uptrend line. We continue to grind up right there. It's just that uptrend line right there. So when that breaks, I'll point that out. That'll be the sell signal that I'm looking for. SPY is, grinding higher. And for the most part, moving higher on the back of FANG. You can see here that, we're above the all-time highs, kind of, creating new all-time highs. No real volume to speak of. Here's your volume right here today. Again, more low volume. So just breaking out to new highs on low volume is not a consensus trade. So what that tells me is that this move is running out of steam and we're looking for the sell signal. Not there yet, but again, it'll most likely come when tech breaks. Here at the small caps, so the small caps look weak. They continue to show relative weakness, I guess, because they don't have the FANG stocks. They are, kind of the real economy stocks. And the small caps are continuing to kind of grind lower and make new lows. If you look at the hourly here, you can see we're just working our way a little bit lower lows, lower highs. So that means that, this is oftentimes a leading indicator where the market's going to head, the small caps. So if the small caps start selling off and we get some more impulsive sell-off, that might mean that the rally in the SPY and the triple Qs is just about over. Doesn't have to be, but could signal that. I took a small short on IWM the other day, and so 156.20 is really resistance right here. You can see it right here. We tested that. We've now rejected. We've broken down, and we back tested right here. Here's another back test today, and it was rejected again. So 156.20 continues to hold as resistance, so we'll see what happens. But to me, this looks like continued downward price action. Let's look at XLF. So here's the financials. And again, I keep pointing out, if there's going to be any kind of recovery job, it's going to be right here in the financials. They've got to keep financials, holding support, or at least trying to, if the market's going to hold support. Now, financials did break down last week. So here's the uptrend going back to the March lows. And you can see nice clean uptrend right here. And here's your breakdown. Wasn't impulsive, so looks like financials are going to come in for a back test. And then we'll watch. I think that back test most likely will reject and we'll start to move lower. And that's what it's set up for. But until then, we'll have to watch what it's going to do. Looks like it's going to run up and do a back test as of right now. XLV, second largest sector outside of tech, which is healthcare. And you had this bearish rising wedge here. We broke down, but it's just kind of chopping sideways, working its way lower, nothing super impulsive. So we'll see. This could easily chop around, consolidate, and then do a back test. We need to see some more impulsive moves. The market right now is just grinding around. It's grinding higher slowly, but there's just no real impulsive moves. So there's nothing to actually, just jump on and spot from a sector perspective as a major trend or trade we have to wait for that impulsive move. I think it's going to come because oftentimes when you get compression of volatility, and we'll jump into that here real quick. Here's your UVXY. It's a volatility ETF, and I used to trade TVIX, but they retired that one. So this is the one I'll be looking at, UVXY. I should track it relatively well. And we've got compression of volatility. So bullish falling wedge in volatility, which means volatility keeps getting compressed, which is what we're seeing in the market. This kind of slow and steady grind higher as volatility gets compressed. This often ends with a large impulsive move to the upside. You can see it basically like what we saw right back here. You can see this compression of volatility. You know, this was basically a bullish falling wedge, which is what these things set up for. They set up in bullish. Grab my line here. It's moving around on me. The volatility typically will compress over time. Sorry about that. Got a phone call. But you'll see these bullish, these bullish falling wedges, and then you'll get an expansion of volatility, and then usually it just goes crazy. And so that's what it looks like we're getting right now. We're getting this contraction and waiting for the expansion trigger. And so there's a potential, trade there when it happens. We just need to wait for it. Cover gold real quick. Gold continues to look weak. Here's the hourly chart. We're just grinding, basically kind of grinding sideways, but it looks to, sideways to down, because here's the daily chart of gold. You have these big impulsive sell-offs. Here's a kickback rally, and just a very shallow rally, and it's being faded. So to me, it looks like gold is going to continue to work its way down to 1790, maybe undercut slightly, find some support, recover, and then continue on the bull market. This is the bull market I can see in gold right now. So it looks like we're going to have a correction and then, should hold and continue higher. That means the dollar continues to move higher right now in a corrective wave. So you've got here, you can see very bullish action in the dollar from what I see as of right now. Here's what we got. Look at the big picture. We'll go to the daily. This green line right here is your uptrend. This was your uptrend in the dollar. And you can see recently as I scroll in, we broke down and we're just consolidating here. Looks like we're going to come in for a back test of this 95 level. And as I narrow it down to the hourly, we had a bear trap. So here's the hourly. We had some support put in here at 92.50. We broke down last week, but then recovered that, impulsively recovered it, came back in for a back test, held, and moved higher. And now we just continue to move higher. So starting to uptrend. Looks good for a back test of this 95. So ways to play that is obviously short the gold miners, which is what I'm doing. I've been shorting, I shorted the silver miner, this PAAS on the breakdown right here. That one's continuing to work very well. I'm actually short Barrick Gold here. Barrick Gold got some pump from Warren Buffett, the Warren Buffett pump. And the following day it was up quite a bit, but then here's the following day, it was up 3% after the Warren Buffett pump, but that in that hour, right when it opened, instantly sold off and recovered back below this trend line, or this right here. So this was your uptrend line in Barrick. You can see prices just moving higher. We broke down, the Warren Buffett pump came in, which was a back test and a failure, and now we continue to move lower. So I shorted that right here, right when we started to sell off the day after the Warren Buffett pump. And I think we head lower. I think we're going to gap fill down here at this 90 or 27, and then, potentially run down to, 22.50, maybe 20.50. It depends on where gold bullion's at the time. So I'm kind of watching that, but for now, looks good as a short. Dust is another potential idea. Again, all these are just my opinion. This is not trading advice. But dust, here's dust. Looks like it's just consolidating and making higher lows. So you can see here's a low, higher low, So we're looking for some sort of a breakout. And, if you mark it out, probably you've got some sort of a sorry, this is difficult when we don't have a lot of room to mark it, but something like that. And there's a trend line. So look, you got a breakout, a back test. Now you're moving higher. So to me, it looks like dust is a potentially in play for a move up. And again, this is short-term stuff because gold is in a longer-term bull market. So this is just playing a potential correction in that bull market, not the start of a bear market or anything like that. PayPal, this one looks weak. Here's what I got in PayPal. Uptrend line from the March lows. You can see reaction here, reaction right through here. We broke down last week, back test, and again today a pop-up, kind of opening right at a back test and a failure. So it's opening at resistance and being sold off. So that's weak action. Usually if something's strong, if it was going to be like a false breakdown, you would open at resistance and then maybe recover it and create that bear trap right here. But instead, opens at resistance, instantly sold into. So this looks like we're changing in trend essentially. And you can see here the other thing, lower high. You've got the high right up in here, and you just made a lower high basically. So now you look for the lower low. But it looks good for a trend change. And so we're going to continue to watch that. If you look at the daily here, you've got negative divergence in the PPO and the RSI. So it's signaling, right here, you can see when it made a lower high in the PPO, it was a higher price. So that signals that this higher price was made with less and less participation and less momentum. And that signals the momentum change is coming soon. Then you look for break in price support, which we do have. Not an impulsive breakdown yet. So very, kind of just limping around. So now you just want to see some sort of impulsive breakdown to confirm the momentum is fading. Here's a trade idea. Again, just my opinion. Nvidia, it's been on a tear, obviously, to the upside. But what we have now on the daily chart is we have bearish rising wedge. We don't have... there is no real short-term negative divergence in the RSI. You can see here that we've been continuing the momentum. So the momentum is not faded yet. So that's one thing that gives me pause. I'd want to see some sort of negative divergence set into motion. But we do have a bearish rising wedge. So you can see here they overshot that wedge today, but it's closing back below. So I think we're probably going to muddle sideways, maybe slightly down, hit support, maybe bounce a little, put in a negative divergence, and then roll over. But again, you haven't broke support, so you want to see that. But a way to trade this is you can always short at resistance. You can short on a break of support or short at resistance. Shorting on a break of support is a higher probability trade. Shorting at a break at resistance is a higher profitability trade if it works out, but lower probability. Okay, so at the end of the day, we've got XLV has broken support, not impulsively, but has broken. So here you go. There's your kind of short-term support starting to break down. XLF has broken support, not impulsively, but has broken. So you want to see, if it's not going to be an impulsive breakdown, you want to see a rejection on a kickback rally. You want to see that impulsive breakdown price action, big red candle, that helps the set things in motion. So we don't have that yet, even though you have a breakdown. So what I would do on this one is if it's going to back test, you could short on a back test and then cover that short if it recovers the support, or if you get the impulsive breakdown, that would signal a confirmation of a bear break and a continued move down. Tech has not broken down, and ultimately this entire market is centered around tech. It's around the 5 FANG stocks, plus Tesla obviously has been a real contributor to some of the momentum. So you want to see that momentum in tech fade. When that happens, the big breakdown should come. Going back just to wrap up this video, we've got negative divergences in the S&P 500. You can see it here on the PPO. We've got it here on the RSI. So we have negative divergences saying that the momentum of this rally is going to fail or fade, and we're going to start start a new trend to the downside, but we don't have that breakdown yet. So we continue to watch that. Look for a breakout in volatility. All these things are signs that give us clues of when the trend to the upside is going to fail. And I think that's where the opportunity will be now at this point. The opportunity has obviously been to the upside for, the beginning since March, basically. There's been lots of opportunities in this market. The opportunity in 2020 was a big move to the downside, which I was able to catch most of that move. Then there was a big move to the upside, which I was able to catch a part of the uptrend move. I didn't catch it all. And then now I think the opportunity from a swing trader's perspective is now going to be to the downside. So we are going to continue to watch that. Thank you for subscribing. Give me a thumbs up. Catch you on the next one.